Hello everyone and welcome to today's session. I'm just waiting. Are we ready? Are we good to go, darling? You're recording. Oh, for recording even as I speak. Welcome to today's session. Starting slightly later than usual for a number of reasons, which we'll go through as the session progresses. If this is the first time that you're joining us, I run this webinar together with my husband David, and I do promise you he does get a word in edgeways sometimes. But before we start, can I just draw your attention to the disclaimer that's on your screen? As you all know, and I'm sure you've heard this many times before, this can be a very risky business, and you should never ever even think about using money that you cannot afford to lose. So having said that, okay. David has got, I think you're doing Ninja, darling, aren't you? You're doing, and he's going to be looking at the New Zealand dollar in particular. I'm going to be talking to start initially about the British pound for a number of reasons. There have been some really nice VPA lessons on the British pound. Also, I want to bring in the current numbers at the CFTC, the short positions, and whether we've been looking at a short squeeze. Certainly last week, following the remarks from Michel Barnier. And again, if this is your first visit, essentially what we do, obviously we focus on VPA, we look at the price cycle, we look at what we call our C states, and we just put everything together, and we also use our quantum trading indicators, which David and I have developed to complement volume price analysis. It's a question I'm often asked, and saying, you know, because obviously if you have the books, you will know in the books, I don't believe that we don't use any indicators other than in the forex books. You will find a currency strength indicator, because I don't care what anybody says, you really can't trade this market, forex market, if you don't have some indicator that tells you when a currency is either overbought or oversold. And if you like, it's a sort of criticism, if you like, of people saying, well, you know, you've done these books and it's volume price analysis, you know, why do you support, why do you have indicators as well? And I make no apologies for it, because yes, it is possible to trade just with a bare chart. There are many traders who do. They are very experienced traders, but volume price analysis has 5 different elements, one of which is support and resistance, and obviously we have volume as well, and we've got candle and candle patterns, and all the indicators that David and I have developed at Quantum Trading are all there, first of all, to make our life a little bit easier, and they all complement volume price analysis. But what we say is you start with volume price analysis. That is your foundation. Once you understand price action, its interaction with volume, the price cycle, the C state that you're looking that is being presented to you on your time frame, and then after that, with that understanding, indicators actually become more relevant and they become more meaningful, because you know, first of all, why they've been developed and for what type of market condition. And this is where a lot of traders actually struggle, because they start with indicators, they just apply them to a chart, and then they may work, and then suddenly they take a trade and it doesn't work. And it's not because they're wrong, the indicator doesn't work, it's simply because maybe they don't appreciate why that indicator was developed in the first place. We started the other way. We started with volume price analysis, and we thought, yeah, okay, this is volume price analysis. These are the elements of it. This is the price cycle. These are Wyckoff's 3 laws. This is the C state that I'm looking at. Now, what do I need to enhance that? What do I need that will give me that information quickly and help me with my trading and investing? So, as I said, this is how you should start. So volume price analysis is your foundation methodology, and after that you can then incorporate, as I said, there are quantum indicators, but I can assure you there are traders out there who use this with Fibonacci, with Elliott wave, with moving averages, with fractals, you know, etc., etc. And what it does, it actually enhances their trading. It actually makes the indicator, I'm not saying better, but they know they will know that it's being applied in the correct way. I'll just pass over to David and then we'll start.
Apologies, sorry, I was just looking at something else. My apologies, and a very warm welcome to you all from me as well. Good to have you along today. Wherever you are in the world, it's morning here, but wherever you are, a very warm welcome. Just a very quick heads up on the way we run these sessions. Very much we flip-flop between the two platforms. Anna's on the MT5. I've got NinjaTrader. MT5 is a great multi-asset platform. We've ported the indicators over from MT4. So if you're familiar with MT4, the step up to MT5 is very, very straightforward, and it opens up an array of timeframes which you don't have on MT4, and it also opens up all those other markets that you also are not available on MT4. Of course, you've got forex, but you can trade indices, you can trade commodities, gold, oil, even soft commodities, and you also have a range of stocks there as well. Can be quite limited, the stocks, but nevertheless they are all there, and bonds as well. So it's a great platform. NinjaTrader, on the other hand, it's more complicated to put together because you have to buy the various components or bolt the various components together in terms of a data feed, obviously a brokerage, and you can interface that into the NinjaTrader platform itself. But that gives you access to pure futures markets for indices, commodities, and so on and so forth. If you have any questions, just drop them in the chat box. Happy to answer them on air if they're longer ones, and I'll just pass back to Anna now and we'll get going.
Darling. Okay, pound, British pound. Obviously, we started a bit later because it's the first week of the new trading month. It's actually the start of the sort of rundown to the end of the trading year, and it almost feels like, you know, the first day back at school. All the silliness that happens during the summer months, that's all going to die down. Everyone's going to start getting a little bit more serious, and it's just generally there's going to be more liquidity. There are going to be more participants in this market. It just has that feel of, well, you know, that I can only describe it as that kind of back to school feeling. Now, with the British pound, obviously, what's always been at the background, and it's for the last 2 years now since the original vote. There's obviously Brexit. Those of you who come along regularly will know we have two dogs, Bertie and Harry. Unfortunately, we've had somebody knock on the door, so that's why they've kicked off. So apologies for that. David's going to sort that out. Right, I've just gone to about Brexit. Brexit is obviously now the time is running down to when there's supposed to be some kind of agreement. There's those of you here in the UK, you know what the press is, what you'll read in the press on a daily basis, but what is actually important, what is really going to move now the British pound, or you know, move the narrative, the Brexit narrative on, is really what the Europeans are going to be doing and saying. And this, we had a perfect example of this last week. If I could just draw your attention to the candle that we had over here. This was Michel Barnier coming out and saying, being sort of quite emollient, quite you know, quite cuddly, as it were, and sort of saying, well, you know, I'm sure we'll come to some agreement. The market absolutely jumped on that, and cable, as you can see here, the British pound, you know, British pound absolutely roared up. But from a VPA perspective, this is, as I said, this is the 4-hour chart. And can I draw your attention if you say, well, actually, this is awfully interesting, but, you know, this is just one isolated piece of price action. And it's going to be the type of price action that is going to be more and more it's going to recur more and more, certainly as these deadlines approach, as it were. But if I could just draw your attention here, right back here on the 4-hour chart to this hammer candle, where we have sort of classic VPA, where we have, let me just reduce that, and you can see the extent of the fall that we'd had in cable, where basically we'd had this really nice run down, then we had a period of consolidation. We had, you can see here, we had quite a dramatic shooting star. Here we have the stopping volume coming in. You can know it's stopping volume because if that was going to carry on selling, that candle there would have been a down candle. It's not. There's clearly buying, stopping volume and buying coming in simultaneously, and we know that's also above average. We can see here this is the tick volume indicator, where this is the sort of median line, and there was a lot of volume coming in. And you have to remember also, this is in August. This is in, you know, at a time when there is lower participation, there's lower liquidity, so obviously the markets are saying, yeah, you know, maybe things aren't quite as awful. And it's also coincided, obviously, with a reversal in the US dollar, because obviously in forex we are looking the two sides of this equation. We're going to see, well, what is happening with the British pound and what is happening with the dollar. But whatever it was, then we had this really nice run up, we had a slight pullback again, and then we had Barnier. Now, the reason I'm highlighting this is because you also have to see this in the context of what is going on in the futures market. I did actually a post on this on Facebook on this, and basically this is really interesting about the British pound, and it's where we have to sometimes have a bit of sort of cognitive dissonance in our heads about what is going on with a currency and a currency pair. Oanda used to do a really nice little tool on their site which gave you what the positioning was at the CFTC in terms of long and short for different currencies. But for some reason they haven't updated it for some time, but investing.com have come to the rescue on this one, and I really do. I don't suggest you go and look at this on a daily basis, or, you know, base your trading on this, but it's very interesting to look at these positions, particularly when the numbers are increasing and when they are reaching, which has historically been an extreme, and also go and see, particularly when the futures is signaling one direction and what you're actually seeing on the chart is totally contra to that. And what I wrote in my Facebook post last week, I said, this is for the British pound. This is the pound speculative net positions. Now, the positions that we actually look at as retail traders is quite a complex information that's released by the CFTC. But so, which is why I say you can go and look at it at the CFTC, but I don't suggest that you do if you're not familiar with it. Just use the investing.com site, and what you get is they reduce it down. This is what's called the non-commercials. These are the people that we as retail traders, they're the big guys out there, and we need to know, what are their feelings about a currency at any given time. And this is on the British pound, and obviously when you have this this line here, when it's below the line, that's the number of shorts, and when it's above, it's the number of longs. And what's interesting here, as you can see, this is going back to around the time of Brexit, and you can see the number of shorts. Everyone was so heavily short, and you have to look at the chart to see that's what was reflected. But what's interesting at the moment is have a look at what they are at the moment. Now these numbers are released every Friday, but they actually, the cutoff, if you like, they are actually the numbers as per the previous Tuesday. So there's always a lag in them. But what is interesting is that since last week and the week before, and we had that, if you look at the chart, we had that sharp move higher in the pound. You can see here, the shorts have actually increased. They actually increased their positions. So although Michel Barnier coming up and giving cable a 200 pip uplift, as it were, in the futures market, the opposite sentiment appears to prevail, as it were. Now, you could say the argument is, well, they could simply be hedging. That's one say. Or you could say they've always been short. If you can see the shorts building up right back here from July, they've been steadily building up. Then we had on the 4-hour chart this move higher as per this hammer candle here. And what you could say, certainly from a longer term perspective, a trading perspective, you say, well, this is what's called a short squeeze. So you hear that expression, this is where you have a short squeeze, where although you have heavily bearish sentiment, you do get a reversal. And what also happens is in the futures market, there's so many people are short, and it's also an attempt to squeeze them out of the market, because if you think you're short, and depending on where you are short, where you came in short into this pair, and suddenly you have this, you know, very, very dramatic move against you on, you know, a lot of volume, you think, well, am I going to sit here and you know, put up with this pain? You're going to have a lot of conviction, if you like, to maintain this. Say, no, they're going to try and squeeze me out of this market, but I'm going to hold because you know, this tends to be with fundamental analysis and longer term charts, which is why a lot of traders pay attention to this, particularly if they trade, as I said, the longer term charts. However, how that impacts the shorter term traders is that you just have to be aware of it, because if a pair goes into this, as I said, into a short squeeze, as it were, then there are going, you know, there are going to be opportunities to take trades which seem counter to longer term sentiment and maybe what the market, you know, maybe, you know, because of all the political background and fundamental data. And of course, this week being the first week of the new trading month, we've got all the PMI data, which will move a currency. And the first week of the month is always a very busy time for the British pound anyway, because, as I said, you've got the PMI data as well. This is another thing you have to begin to understand with forex trading. Yes, the technical picture tells you an awful lot. Yes, it will give you your trading setups on whatever time frame you want to trade, but you really do have to start to get to know what moves, what is the fundamental driver for the currency and the currency pair. And actually, after I pass over to David, I found a very nice site which I introduced to our students in our Trader Chatter group, where it's just a quick heads up on the different pairs, and it tells you the week ahead what fundamental news is for each of the pairs, and you've got it side by side. You think, and it gives you perhaps those pinch points. So you can kind of see, yeah, well, Wednesday I've got this and I've got that, because looking at an economic calendar as they are generally presented, just as, you know, a list of releases on a time basis, and it's once for the dollar, then it's for the euro, then it's for this, you know, you've actually got to put those together, you know, match them to the pair that you are trading, and this site does it for you. And I think it's a really nice nice bit of information, because it's very quick. So you can, you know, when you're looking a week ahead, you say, right, Thursday, right, the pound's got a really important piece of an important release, but so has the US dollar, or maybe the Aussie or something. So I'll bring that up, and we'll have a look at that later. Now, what also happened with the British pound is, overnight, just before Labour Day, is it had a gap down. Here we are. This is the gap down that we had, and it tried to fill the gap, and then it's actually carried on low. And it carried on lower primarily because the PMI data, the manufacturing PMI data, came in lower than expected. And as I said, and maybe this was just a short squeeze, and maybe the futures market, the futures traders, they know something that us mere retail traders don't know. But it's just putting together these bits of information that you have to have in the back of your mind. Now, if you are on the faster chart, the 5 minute, the 10 minute, whatever it is, you know, how will that impact you? It will impact you to the extent that you will have a more rounded picture of what is going on in your currency pair. And of course, with cable, this is the thing about forex which makes it so fascinating, is yes, by all means be aware of what's going on with the British pound, but there's an awful lot going on with the US dollar as well. So things are definitely going to be hotting up in the coming weeks and months, but we'll see how that plays out in the forex market. Now I'm going to stop there because that's what I want. I wanted to do more of a fundamental type of introduction. I know you've been looking at some charts, haven't you, darling? Yeah, and let's go and see what actually is perhaps what he's been looking at this morning.
Hopefully that should be coming up any second now. Yep, I'm just looking over Anna's shoulder and I can see you've got the NinjaTrader up there now. Did you do the question? Yeah, there are several questions there, and what I'm going to try and do is answer certainly the VPOC questions, or the VPOC question about how to use the VPOC indicator and how it works and everything else, but it's kind of incorporated into what I wanted to talk about anyway, so it fits really nicely. And the reason I've chosen this particular pair, the New Zealand dollar, is because it really encapsulates a lot of the lessons of volume price analysis, and it also draws in all the indicators which then help to reinforce what is going on, helping you to stay in the trade, and also looking for reversal opportunities, or perhaps when a move is coming to the end of its life and the cycle is going to reverse, and so on and so forth. So I just wanted to focus on the New Zealand dollar. I've got the 5-minute chart up, and at the bottom we've got obviously the volume, we've got the trend monitor here. Up on the right hand side we've got the volume point of control itself, and these levels up and down here are support and resistance regions from the accumulation distribution indicator, but that's very similar in terms of how it works, in the sense that it is using price to develop those particular levels of support and resistance. And the place to always start is, and it was quite interesting, we had a comment from a customer who couldn't really grasp the importance of using the indices, which is a little strange, but there we go. And if you start with, we've got the dollar index, the yen index, and the euro index. And I can't stress it too strongly. Whatever you're trading within your particular matrix, within your particular pairs, you've got to have an idea of what is going on in terms of the primary index. These are all on 5 minutes. So this is not to say that we're not making the point that intraday scalping trading is the only way to go. It isn't. It just makes it a little bit easier from a demonstration perspective, certainly from a teaching perspective. It just makes things happen much more quickly in real time. The other nice thing with NinjaTrader is what it also prints is the actual time in your time zone that things occur. So the phase of price action we're looking at down here, this is really the Europe open at 7 o'clock for us UK time. We go through to this 8 o'clock period, which is when London opens, and now we're trading around about 11 o'clock UK time. So we've got a sort of 4-hour period here. And throughout that session, so far, certainly up until 9:30, 9:45, it was very, very strong dollar buying. And that's the reason we've seen a lot of the majors selling off quite strongly this morning. And it's just exemplified by the fact, a glance at the dollar index chart will tell you instantly what is going on. What is going on right now? We're in a congestion phase. Haven't got any indicators on the chart, but just eyeballing it, we're building a ceiling, we're building a floor. And exactly the same thing. This is euro dollar. I've got this particular indicator attached to, but it would be very much the same principle on any other chart. So we're building congestion. Very quickly hop over onto the yen. What have we seen with the yen? Similar sort of picture for the yen. A lot of yen buying this morning. This is the yen index. Again, it's on 5. This is 7 o'clock. This is 8 o'clock. And we're continuing to see some fairly strong yen buying in the faster time frames. And finally, just over onto the euro, what's happening on the euro. The euro is currently in a sort of sideways move at the moment. And, you know, we've had a little bit of positive here, back negative. Now we're into congestion again, and that's pretty much reflected on it. This is on 1 minute, beg your pardon. I just changed it up to 5 minutes, so they're all pretty much the same. There we go. And that's pretty much what we've seen. So we've seen some buying of the euro, but very much contained within a reasonably tight congestion range. So if we head back over to the chart that I wanted to focus on, this is the New Zealand dollar. We had this fabulous move this morning. And let's start with the support and resistance levels, if you will. And unfortunately, I wanted to get over this chart before the volume point of control. This yellow line here is actually the volume point of control. Let's start with a VPOC, in fact. This yellow line here is the volume point of control. And what that means is it is the fulcrum of the market. It's the point at which price agreement has been reached. It is also the heaviest concentration of volume on that particular time frame within the price region. And just prior to Anna switching screens, the volume point of control was up at this level. This is where price agreement had been reached. We then had this very strong breakaway of price action supported by volume. And as you can see, we had these levels of resistance built. We had minor levels of support building. And one of the most difficult areas to maintain a position in a trend like this, where you're making money and you want to keep making money, is when you get these reversals against. That is the point at which emotion kicks in. You become fretful, fearful. Imagine, for example, let's say you've got in somewhere around here. Let's say you're a breakaway trader. You've had these levels. You've been looking at this level through here. You know, the market's not going anywhere. We've got this big move in volume here, contained price action, relatively weak. Bear in mind we're in the tail end of the Asian session here, so we expect volumes to be pretty light. So we had a big surge in volume there. Market didn't go anywhere. Volume's falling away. We've got a rising market, but that is counterbalanced by the fact that we are in at the end of the Asian session. So it's no surprise that the volume is relatively light at that point. And then we move into Europe and we see the pickup in volume, which we expect. It's natural. We get that anyway. And then we break away. Suppose you're a breakaway trader. You jump in somewhere down here, let's say. You wait for this candle close. Maybe you're on the next one. We come down here, and then we're quite happy here at this point. We maybe see this candle here. Lots of volume, a decent amount of volume under it. Wick to the upside. That still looks pretty weak. And then we start to see these reversing against us. Now, by the time we're back here, we're starting to get back to somewhere perhaps where we got in. We had some really nice profit down at this point, but now that profit is starting to evaporate. And this is the point, this is the pinch point, this is the point at which the emotion really, really does kick in hard, because you're seeing all this start to gradually drift away and back up to here, and you may be half of what you had before. And that's the point at which you start to apply VPA. You're looking at it. It's really a powerful way of using VPA once you're in a position. VPA is not just about getting in, it's about understanding the secondary relationships that occur. This is, if we call this the primary, and this is the secondary, that is really classic Wyckoff. Wyckoff is all about what is the primary trend. In the secondary trend, what's happening is the secondary trend a true reversal, because at this point you don't know if it is or it isn't. And it's really understanding that it is a secondary reversal, and understanding how to interpret it as that and not as a reversal in the primary trend. In other words, a reversal from a bearish trend to a bullish trend. So it's really identifying these areas as secondary and being able to do that live edge of the market, of course, which, you know, that is the key thing. And what you're seeing here is you're seeing a market rallying, but you're seeing relatively narrow spreads and relatively high volume. And then you're bringing in other aspects. You're bringing in the aspect of a ceiling of resistance above, not a terribly strong one, but nevertheless, it's been tested several times over here. And now you're seeing it tested once again over here. You're also seeing the volume build up on the volume point of control. I'll come back onto the volume point of control in a minute. So those are the areas where you really need to apply it. Now, of course, in conjunction with that, you drop down to the trend monitor, for example. Has the trend monitor even transitioned in color at that point? No, it's remained bright red. We had the transition through from the bullish into the darker blue. That is telling us that we're seeing a weakening of the bullish trend. And on this occasion, we didn't even see the transition to a darker red and then into bright red. We just went straight from dark blue into bright red as this very bearish trend started to build quite quickly. And in addition to that, you can see the trend line here, the yellow line, has also started to dive quite steeply below the midpoint, the fulcrum point here, this black line, starting to dive quite strongly as well. And we're getting down to all the way down to the bottom here. And you can see here, obviously, we're in a transitional phase here. On this occasion, we've gone from what was bright red. Now we're moving into a darker red. So these secondary reversals within the primary trend are absolutely key, and they're always identified through using volume price analysis. It's one of the most powerful applications of VPA to help to keep you in, because if you got out here and then saw this happening, you'd be absolutely gutted because you've missed out on a massive move purely through the fear of losing something that you thought you had up here. And that's the most damaging, because if you constantly close out on these pullbacks and take only these very small bits of profit, they will equate to small losses, which you're taking probably more frequently, and therefore your trading account will tend to go backwards, not at a huge speed, but it won't go forwards at any great speed either. And that's the simple dynamic of trading. It is about holding a position through these reversals where your emotion is running high and you want to stay in the trend. We then move on down. We come to this level here. We come to this candle. Lots of volume under here. Volatility is triggered. Our expectation, our anticipation is of possible congestion building as a result, and trading within the spread of the candle, reinforced more so with the amount of volume here. Now we're looking at one chart here. And I'm going to go to other time frames because it really does demonstrate how multiple time frames then start to pull all this together. But let's stay with the volume point of control because I know there were two questions on it. As I said earlier on, just before we switched screens, the volume point of control was up here. The volume point of control is dynamic. It doesn't sit on the chart in one place forever and a day. It moves around constantly. And the reason it moves around is because it is located to the point at which you have the heaviest volume, at which point the price is in agreement. Where we're trading right now is a congestion phase. It's been there a long time. The volume is building in this region all the time. And the reason for that is purely down to time. The longer price action remains in a phase of price, then the denser will be the volume and the greater it will appear on the histogram. Now, when you're trading using the volume point of control, there's several things to think about. First of all, the high volume and low volume regions on the chart are key, because what they tell you is that when price approaches these regions, and this is why you need to consider the volume point of control over different time frames, because it will tell you the different regions that you're approaching in slower time frames. So what's ahead of you, in other words. But if we just stay here for a moment, you can see through this region, the volume there is very light. The price action has moved through there very quickly, purely because these are low volume nodes. We have the same up here. We've got low volume here. The price action is not going to pause there because there's very little in the way of volume from a support and resistance perspective to cause the price action to pause at that point. So it moves through pretty quickly. So if the price action is approaching an area of high volume or low volume on a slower time frame chart, it's telling you that it has the potential to pause there. The market is likely to congest at the very least. It may reverse, but it is almost certainly going to congest. And if you've got the volume point of control there as well, as we have, it's jumped down from here down to here now, purely because the volume here is higher than it was up here. This is now the fulcrum of the market. And as you can see, in addition to that, we're building we're starting to build ever stronger resistance above and support below with the accumulation distribution. Now, in addition to that, we've got another indicator on here, which is the pivots indicator. The pivots indicator is very simple, but actually it's very subtle in the way we use it. In terms of how it works, it's purely looking at the three candles here. And if the high of this candle is higher than these two, and the low is higher than these two, then it'll print a pivot high. Conversely to the downside, if the low of this candle is lower than these two, and if the high of this candle is lower than these two, it prints a pivot low, which is fine. It just gives you a sense of strength, intraday strength and weakness, if you will. The way we use it is it also helps define congestion again, because once you start to see pivot high, pivot low, pivot high, pivot low, pivot high, pivot low forming in real time, it starts to tell you and confirm to you also that the market that you're trading is potentially moving into a congestion phase, because what you want to see in a trend is lower highs and lower lows in terms of the pivots. And when you start to see this pattern forming, you know you're moving into congestion. Now, if we go over very quickly to the, let's go to a slower time frame. Let's go up to 15-minute, for example. Same chart. What this is telling us is just a different version of the same events, if you will. But if we start with a volume price analysis perspective, then first of all, what you're seeing within this sort of candle is you are starting to see some buying coming into the market. You're starting to see at that point some stopping volume coming into the market. It's repeated again here. Deep wick to the body, decent volume underneath, not as high as this one, but certainly decent volume under there, and you've got more here. What we're also seeing in this little downtrend here, which is within this congestion phase, which is extended obviously on the 5-minute chart, we're on 15 here, you're seeing the volume on these two candles fall. So you're not seeing heavy selling coming in at this point. You are seeing a market that's falling, and you've got falling volume. So it's telling you that at present that the selling pressure is starting to dissipate, and we've seen that purely because we've started to see some buying coming in this area here. And if you go back to the 5-minute chart again, all of that is contained over here somewhere, but it's not so easy to interpret it in that way. What we saw here was a volatility candle, which certainly suggested we were going to move into a congestion phase, which we have. What this didn't signal, because on the 5-minute chart it's not so clear, but if we move up to the 15-minute chart, it's very clearly identified. We can see the wicks here forming, and we see it on other time frames. Example, if we go to, let's see what the 10-minute looks like. There we go, similar sort of picture on the 10-minute, deep wick to the body, lots of volume under that candle. So we're expecting at the very least a pause. Now this may not be enough to reverse it, but we are, if we're trading this and we've taken all this profit out of the market, it would not be unreasonable at this point to actually close out. We're seeing volume building here. We've got the volume point of control up here. We've seen very light volume through here. We've seen this move through there, very little volume in the way up the chart. So it's no surprise we've seen the market slice through that price action pretty easily, because there's nothing there to contain it right now. And of course, the trend monitor here is still retaining red. Now, if we go back down to a much faster time frame, let's go to something like a 3-minute. What are we seeing here? Again, it's very contained. Over here, we've got the buying coming in around this sort of region. We've got the volume point of control is sitting down here. We've got this big ton of volume building. We've got a lot of resistance overhead. This is a very strong area of resistance on the 3-minute time horizon. So if we're going to be trading this to the upside, we want to be looking at that pretty closely. We'll be looking at what's going on in terms of volume. And if we were going to trade it as a reversal, then I would suggest the first thing you want to see is you want to see this level taken out, and taken out cleanly as well, with decent volume. And of course, you can do that up and down the time frames. You can go down to 30. Very different picture on the volume point of control. There's great massive volume up here where we've been sat, with the New Zealand dollar up here. And it just, again, gives you so much perspective when you're looking at the volume on the slower time frames. If you're trading a faster time frame, just look at the volume profiles. What is in the way? Have I got low volume down here? If I have, terrific. It means the price action is going to slice through it pretty quickly, because there's nothing there to stop it potentially. Now, you may also have price support and resistance there as well. But that is the way to use this indicator, and indeed all the indicators, in a multiple time frame approach. If we go back to the CSI, which is where it all starts, if you will, and again, this is 7 o'clock London time. Here we go through to 7 o'clock, this is UK time, 7 o'clock, here we are, 8 o'clock London open, and here we are moving through the market. The grey line here, this was the heavy selling we've seen in New Zealand. We're just starting to see that reverse now. Bear in mind, this is a 5-minute time frame, so what we're seeing is we're starting to see this buying continue. Whether that is going to go all the way up to the top, who knows? But at least you have an idea that we're coming out of oversold and we're starting to see some strength coming back to New Zealand. And that is counterbalanced. This was the strong dollar buying. We saw the red line right the way up into very heavily overbought at the top. Now we're starting to see the dollar come off and starting to sell, and you will see that reflected. So if you're looking for a pair to trade, and that's why we picked out New Zealand dollar early doors, because we could see this particular picture unfolding of weakness in the New Zealand and strength in the dollar. Now, if we go over onto the currency array, which is another I've just isolated out here on the New Zealand, you can see here that's reflected down here. New Zealand dollar is down at the bottom. And one of the ways to use the array is really to, if you're interested in a particular pair, you obviously want to see both sides. You want to see what's going on both sides of the equation. So if you isolate out New Zealand, it's fairly obvious that we're still seeing pretty heavy bearish sentiment as far as New Zealand dollar is concerned, because these are sitting pretty much at the bottom. These are sitting pretty much at the top, which is what you expect to see. The only one that's slightly out of kilter is the New Zealand Swiss. Now, if you want to see the counter side to that, you just flick on the dollar. Not so clear cut, perhaps, in terms of dollar selling, certainly New Zealand dollar again, and the Aussie. Less so perhaps here, and also in terms of the dollar yen as well. So, you know, it's not a universal picture as far as the dollar is concerned, but certainly helps to reinforce the picture overall. And of course, you do this up and down the time frames as well in the same way. And the other point, if we just move over to the currency heat map, is what have we got at the bottom? We've got the New Zealand dollar. Now, when I was looking at this earlier, this was red throughout. We're starting with the 1 minute, 5 minute, 10 minute, 15, right the way throughout to the monthlies. And you wouldn't expect much change in the faster time frames to impact the position of the New Zealand dollar. Now, when this was trading through London, this was all bright red. So the whole of this column, or this row rather, was bright red. We're now starting to see a little bit of bullish sentiment come in, certainly on the faster time frames. But if that is going to reverse, I was going to say longer term. By longer term, if you're an intraday trader, that might be on a 15-minute chart, it might be on a 30-minute chart. If you're a much longer term, you're looking at the dailies and the weeklies, then clearly what you've got to see is these green columns change through to the 30s and the hourlies, because they carry much more impact in terms of the trend. So I just wanted to walk you through all that. I hope that's answered the question, certainly in terms of the volume point of control for you. And finally, just to tie it together, is it's always nice to use a non-time-based chart in conjunction with the time-based charts. And this is the Renko indicator on NinjaTrader, which we've recently just launched. But it's another great way to look at price action from a different perspective. And here you're looking at it without the overlay of time. So you're looking at raw momentum here in terms of a chart that has no relationship to time. So it's the speed of the market that dictates how quickly these charts build or not. I'm going to pass back to Anna at that point.
As I mentioned earlier, of course, the driver this morning for cable, yes, the construction PMI didn't come in as well as expected either, although on Forex Factory it's been slightly downgraded. It's not a red, hasn't been given a red a traffic light, it's been given just amber. It's also been driven lower because of the strong dollar buying, and of course the index that you need to consider, we've developed the equivalent of a Dixie index for both MT4 and MT5. If your broker doesn't provide a derivative of the actual index. This is XM, and it does. And what's interesting about this chart, I'm just going to crunch it up slightly, and this is the hourly chart, and we can see the strong move higher for the dollar. It actually went through. Now these levels that we see, that you can see on the right hand side of the chart, I said right at the beginning that with volume price analysis you can add in, you can integrate it as a methodology, as your foundation, into other indicators, other approaches, you know, one, Fibonacci being one. I don't use Fibonacci, but what we have developed is something called Camarilla, and with Camarilla it's purely based on price to derive levels for us that are significant, and one of the most significant is the R4 and the S4. We've actually extended these levels to include 6 levels, 5 and 6. Most Camarilla indicators just give 4. What this hourly chart shows is very clearly this is the momentum higher for the US dollar. It in fact triggered a volatility candle, but unlike the volatility candle we saw on the 4-hourly chart of cable, where price retreated within the spread of the candle, this did retreat initially, but actually then continued higher. But what's interesting, if you can actually see the volume, I'll just see if I can expand it slightly. Yeah, we have here, this is under the volatility indicator, lots of volume underneath it, but as it was climbing higher, the volume was falling. So just from a VPA perspective, we know that this move here, although whilst relatively explosive, was possibly running out of steam. But what we always try and establish with trading, well, where is it going? Where is it going to stop? Where is it likely to pause, as it were? Now you will you know, your candles will tell you that. If you have a shooting star, maybe you have a doji candle, you know, but Fibonacci also tells you, you know, you put a grid on, and it will say, well, it's possibly going to stall here at that level or not. But what the Camarilla does is it very firmly planted itself at the R4. The R4 is a strong level of resistance. Now, if it manages to get through to the R4 under the protocol, that is sometimes considered to be a potential for a breakout trading. I don't use it as in that strict way. I just like to know that if a price is going to reach the R4 or down to the S4, it is going to stop. It is going to, at the very least, it's not going to blast through. That's what the VPOC does. That's what our support and resistance indicators that we have developed are, because all the time what we're trying to establish, it's all very well, it's very straightforward. Say, yeah, I can see a setup. I like to use this particular combination of candle patterns, indicators to get me into a trade. But there's two other things. I want to know, I want to be able to stay in that trade, and more importantly, where do I think this is going to? It's not always guaranteed, but it's nice to have not I'm not talking a fixed ratio. I need to have some kind of price objective, if you like. And by using these indicators in this way, at least I know, heavens above, some people use the moving 200 MA. Oh, well, how many times have you read online posts that says, oh, well, it stopped there because it hit the 200 MA. Possibly it did, possibly it didn't, or the 100 or the 20 or the 4, it doesn't matter. But at least you have something that you can say, well, maybe it's going to get to that point. Now we can see here that it's actually it's stopped there dead, and in fact that coincided with what we saw on the currency strength indicator. Certainly I've got the 10-minute here, we had this rollover on the 30, it's sort of flattening and rolling over. But look what's happening on the faster one, on the 3-minute one. We've had this pullback in the dollar, but it looks like it's perhaps turning up again. So that piece of price action that David was looking at with regard to the New Zealand dollar, after that dramatic fall, we had a little bit of a congestion, then we had some buying coming in. Is it going to be sufficient to actually give us a full-blown reversal? Well, I would say to you, you are going to get a full-blown reversal if there's going to be some sustained dollar buying, but it may only simply be, you know, back up to this R4 level, which is at 95.51. But if it manages to get through there, then possibly, you know, there'll be more heavy selling of the New Zealand dollar. And with this information, what it also tells you is that if you've missed these trades and you think, well, you know, is it worth taking a reversal, or perhaps wait for a continue, you know, this is going to continue in the direction, you know, it gives you the confidence to be able to take that trade. Now it's 11:23. I know, you know, London's sort of settling down, and now the focus will be, well, you know, we've had all the news for London, what's going to be coming along in the New York session. And this was the site that I mentioned. It's called Markets Now. I actually came across this when I was looking for some information on the COP data, the shorts, the CFTC data. It also has that as well. But what I also then stumbled quite by accident, that it's got individual currencies, and then it's the currency pairs, and you can click on them, and then what happens, you get a chart, and you've got the advanced chart, which is with candlesticks, and this is the, what have we got here? Can't see a trade. What's the time frame on this, darling? I can't see it. Oh well, whatever it is. Anyway, but the reason I wanted to see this, not because I particularly want to read their analysis and you know, take, it's interesting to read analysis, of course it is, but you know, base my decisions on it. But what's really interesting is they place it side by side. I know it may sound a very silly thing to say, but we have the British pound update, then we have the US dollar update, and underneath you have the significant events. They don't always update them in real time, but it really doesn't matter, because that's not the purpose of this, is not to go and see what the actual figures are, but it's to show you what is happening, when, you know, what pieces of items of news are going to impact those currencies, either the British pound or the US dollar. And you can kind of see the balance. Well, you know, what's going to be possibly driving one in one direction or the other. And I just thought, what do you think, David? I thought it was a really neat way of being able to. Yeah, sure. I think David said he's got some answers. I'm just going to put some charts up so look at something a little bit more interesting. That's the level to watch on the Dixie. That's 95, 95.50, 95.51. Now, I do appreciate the weighting in this index is very heavily skewed to the euro, so there is that element as well, and it's also got the krona in it. And sometimes you think, well, you know, I can see the dollar moving, but I can't actually see it moving so strongly against one of the other currencies, and it could simply because, as I said, it depends on what the weighting is on the index itself. I'll pass over to David.
Just scrolling back up the chat, and I promised to answer Ranveer your question on trading between 5 p.m. 9 p.m. and I assume you are talking UK time, 5 p.m. to 9 p.m. All I would say is, and this applies to, we have a lot of traders in our education program who are full-time. They are at full-time work, and this is always the issue: is learning how to trade when you have a full-time job. And we always recommend that you keep the full-time job until you are comfortable with what you're doing in terms of trading. In terms of learning how to trade when you're fully employed, if you're looking at 5 p.m. to 9 p.m. as an intraday trader, then clearly what you've got to focus on there, it's not the greatest time, but equally, if you are going to trade as an intraday speculative trader, then you've really got to look at the markets which are most appropriate. And certainly in terms of forex, in terms of currencies, you'd be looking much more at currencies such as the dollar, the Canadian dollar, probably the yen, and possibly the commodity dollars as well. You would be less focused on the European currencies, which would be falling out of favor at that point, purely because London's closed and you are in the latter stages of the US market. So you've really got to focus on what that particular phase of the time clock will be focusing on in terms of the currencies. As we move into Far East Asia, then the focus shifts very much, very, very heavily to the yen and the commodity currencies, and we come back round to London, then it's European currencies, and so on. It goes around the 24-hour cycle. The one thing I would say, though, is you're obviously looking at that from an intraday perspective, but all I would say is that for taking positions and learning how to trade, you can take a longer term view and put positions in the market, because the principles of trading are identical. Whether you're an intraday trader or a longer term swing or trend trader, the principles are identical. So you can certainly take slower positions. You'd be maybe looking at the hourly charts, the 30-minute, probably from the 30-minute upwards, I would say, into the hourlies, because you're going to run those positions for a longer period, probably a day, maybe 2, maybe 3 days, something like that. And the principles you apply are exactly the same as you would apply on any other time horizon. So all I would say to you is, if you are learning how to trade, please don't think that you've got to be a scalping trader. You can learn this business by taking a slightly slower time frame approach, learn exactly the same lessons because they're universal, and apply them in exactly the same way to the same charts. And all it means is that your stop loss positions and your money management will be slightly wider to allow for those positions to breathe. And can I also say that if you move out to a slightly slower time frame, you can put different types of orders into the market. You can put market orders in, limit orders, which basically are triggered on a particular price being hit or not. And you just approach it in a slightly different way. It's a different kind of mindset. I hope that answers that one for you. Just scrolling down to Sahil, the red dashed line, no, it's not the VPOC. The dash red and the dash blue are the accumulation distribution, which I prefer in that color scheme and in that presented in that way. They're nothing to do with the volume point of control. The volume point of control is the histogram itself. You can see it there on Anna's. It's pretty much the same on Ninja. She's got a solid yellow line. I've set mine up as a dash line on Ninja, and then behind that you've got the histogram itself of volume, and those darker and lighter lines simply identify where you've got higher volume nodes and lower volume nodes. In other words, potential support and resistance. I generally speaking have those off. I prefer that, but you can toggle them on and off on the NinjaTrader platform, so that all you actually have is the VPOC itself, the yellow line, and the histogram behind it of the volume profile up and down the chart. So I hope that answers that one for you. I'm going to pass back to Anna.
It's very nice actually, because I was looking at the cable again, and certainly on the Renko and on the 1 hour chart here that I've got. As you can see, it's just solidly red. This is the this is a breakaway. That's the gap down. Try to fill that we saw on the 4 hour, and it's just relentless. And now we've got weakness coming in again. In fact, the S4, we've got the break through the S4. As I said, the R4 and S4 on the Camarilla is hugely important. And as I compare it also with what's happening on the let's have it here on the 1 hour of the dollar index that we were looking at, and again it's really trying to push through that level. So levels, we always say, David and I, this market is trading is about levels and flow. It's identifying the levels that are going to be key to reversals, key to where things are going to pause, and obviously the flow that's then needed to actually push through those levels. So as I said, the R4 at 95, 50, 51, that is what we are seeing, and that's what you see being played out at the moment. And you know, once you understand that, you then have to put together a set of trading tactics that you are happy with. Are you going to be a reversal trader? Are you going to wait for major reversals, or are you going to perhaps look at a breakaway trading? Breakaway trading, breakout trading has a really bad rep in this industry, and I don't really understand why, given that most markets are in congestion for most of the time. So you really do have to sort of, you know, get to grips with it. But it's partly because it is because they don't use volume to validate that breakaway, and they don't use perhaps the correct levels to gauge whether, you know, it is going to retest, but is it just a retest and it's not a fake, you know, a fake move and it just goes straight back through. And of course, you know, in forex, you having something like the CSI is going to help as well. This is what we didn't see earlier. This is a slide from our education program, just to look at the price cycle, and this is in theory, and then obviously you apply this to the actual market themselves. Very, very quickly, before we wrap up, quantumtrading.com is where we develop all our indicators, MT4, MT5, Ninja. We're looking at it's Trading View, David. Yeah, very excited by Trading View. We've also got TradeStation on the horizon, really just to give traders out there the biggest choice possible. You can buy just one. You'll find discounted bundles, or you can buy the complete package. If you buy one, you'll use upgrade to a discounted bundle, and then you'll always get a credit. You get a lifetime license. All upgrades are free, and we have a 7-day money-back guarantee. But what you also get, other than this wonderful 24/7 support, 365 days a year, and you can transfer from platform to platform, is when we develop new indicators, and we are developing new indicators and upgrading existing ones, you don't pay us any more money. So if you have a full package and we develop another a flow indicator for the sake of argument, it will simply be added to your package. You can invest in the full, as I said, all future indicators are free, and the cost is $894 for MT45 or $1197 for NinjaTrader, and both are available on the easy payment plan. And the difference in price with Ninja is that we have some additional indicators that aren't available on the MetaQuotes platform. They just can't, they can't be supported. This is where we are at the moment. This is the education program that we have. This is the price for the education program, whether it's MT45 or Ninja, but it does include the indicators. So the cost of the actual program itself is actually relatively small relative to the overall cost. And it's about 50 hours of video podcasts, and there are PDFs, and it is fully self-directed. And David and I have something called Trader Chatter, where we support our students. They can ask questions, they can interact amongst themselves, and you can find more information at quantumtradingeducation.com, or you can drop me a line, anna@annacooling.com, or helpdesk@quantumtrading.com. So all it remains for me to do is to thank you so much for coming along today. We've really enjoyed it. I hope you've enjoyed it and have learned something that perhaps you didn't know before. We are back later on, I think 2:15, David? Yeah. So. 2:15, yes, London time. So if you do want to come along, it'd be lovely to have you join us. Otherwise, we will catch up with you next week. Take care, everyone, and thank you so much for coming along today.